was down 274 points at the session low. We're up 252 right now. Shannon Saccocia joins us, SVB Private Chief Investment Officer, and Tony Dwyer, Chief Market Strategist at Canaccord Genuity. So Tony, it seems like this is the kind of action that you'd expect in the summer. You've been saying the conditions are ripe for a summer rally.
Right, Sarah. So there's three reasons that we started making that call. Remember, we've been on the sidelines for the entire year up until we made that call to dip our toe in, I think, on the show about a month ago. And it centered around 3 points. Number one, you had an extreme intermediate-term oversold condition coupled with high pessimism. That still exists. It's reversing a little bit. It's pivoting higher. But that typically, you get a little bit of follow-through with that. Secondarily, there was a belief that the Fed is already discounted in the market. And again, with the 10-year note yield and inflation break-evens a little bit below the peak that they were at earlier in May, that condition still is in play. And then lastly, economic expectations just got far too negative. We had the negative GDP print in the first quarter on inventory and exports. Some of that's going to reverse going into second quarter. So expectations just got a little bit too negative. So all three conditions that set the stage for a rally or a bottom remain in place. It's still highly questionable if it's the bottom.
So what do you do as you see rally days like today? Should you take it as an opportunity to get more defensive, to take positions off the table, to set up for whatever's coming next?
I think you set up for whatever's coming next. So the biggest bounces so far has been in those areas that got hit the most, and that makes sense. Remember, every rally starts with a short covering rally. So you're getting a bounce over the last few weeks with the exception of the last week. You're getting a bounce in those names that have had the worst drop. So at this point, if you didn't like them down 10% ago, a couple of weeks ago, you may want to cut back on those. Again, this is in the context of a market that's trying to find its footing because the money backdrop is very different than it was even 2 months ago.
And get into where? Do you still like energy? It's up another 3% today, a tremendous move.
You know, what I've done is I've taken a neutral bias. So like if you're overweight technology or if you're overweight energy on a ramp, I just neutralize it. I think this is an environment where you don't want to get hurt. I don't think you get negative. You certainly don't want to get negative down 20% in 4+ months. That was our call. So as you go up, if you were uncomfortable a few weeks ago, then get comfortable and do whatever it is. I think it's inappropriate for people like me to come on and broadly say what people should do because that's based on the risk tolerance. If you were uncomfortable at the lows down 20% a month ago, you're now 8% or so or 7% off of those lows.
Yeah, NASDAQ's about 25% off the high. So Shannon, you are putting money to work here. You like some of these tech names, I think, especially ones that are working today in the software space like CRM. Have you held that conviction throughout the big sell-off, not worried about an IT spending slowdown?
Well, it would be inaccurate to say I'm not worried about it. Of course you're worried about it. You look at the economic data, and to Tony's point, we've seen things get significantly more negative over the last couple of weeks as it relates to sentiment. But I think that Tony's point is well taken, and in looking at across whether it's sectors or your allocation in stocks versus bonds, neutralizing your exposure, we've been actually bringing down our technology exposure incrementally over the last 9 months or so to get to an even weight. That's in part because we want to make sure that some of the names, like you mentioned, some of our cloud names, CRM, Adobe, those that are really going to benefit from this hybrid environment are higher conviction names in our portfolio. And so that comes at the expense of trimming names like Microsoft and Apple. But we think that's appropriate as we're going into the back half of the year. I don't disagree with Tony. I think we're setting up for potentially a summer rally, but I don't see that rally happening until after mid-July. I think we need some earnings catalysts for us to build a true foundation for this rally. And I actually think we're going to get a couple more weeks of chop here as we move into July.